Hi everybody, this is Boris Schlossberg from NYMEX, and the biggest story in the currency market today is actually the euro. Although today is Fed Day, the market is pretty much priced in the rate hike that is going to come and is looking past that. And tomorrow we're going to have the ECB rate decision, which is going to be very important because the market is actually looking for the ECB to begin communicating that it's willing to taper as early as September. The big story is that the ECB, I think, is getting very worried about the interest rate differential between the US and European rates, which now stands almost at 200 basis points. That means that there's potential here for some very serious skew as far as interest rate differentials go. And President Draghi is very likely going to want to begin to normalize policy sooner rather than later, despite the turmoil that's going on in Italy. Overall, conditions in Europe have been very sound, and the market is going to be looking to see if Draghi gives the green light for a taper in September. If he does do that, that's going to create a very decent short-term, short-covering rally in the euro. Because the currency has been so grossly oversold, it now has found very strong support at the 115 level and has potential and scope to trade all the way up to 120 should the market feel that the ECB is going to tighten. Because it really doesn't matter what the absolute interest rate differentials are. In the currency market, as always, it's always the anticipation that matters. If the market begins to anticipate that ECB is going to tighten and begin to match the Fed in normalizing monetary policy, that's going to be in the near term more favorable to the euro than it is to the dollar. So given all those conditions, that's what we're going to be looking for in the currency market tomorrow. This is Boris Schlossberg from NYMEX.